Welcome to Road to Redline, the #1 Porsche and Car podcast celebrating the people and the stories behind the world's finest sports cars. Road to Redline is presented by YouTuber and magazine editor Lee Sibley, serial owner and columnist Joe Williams, and 993 owner Andy Brookes. Three enthusiasts on a mission to open doors and bring you the best stories, secrets, and exclusives from the world of Porsche.
So guys, have we got any chance of making finance interesting?
Well, at face value, put it this way, series 1, wasn't it? We had the insurance episode and we were all thinking this is going to be a little bit beige, and it was actually bloody interesting. So fingers crossed we'll continue in the same vein.
Absolutely. Okay, so we're going to hope this isn't too beige then. That's the plan.
Yeah. So who have we got on?
We have got Jonathan Franklin, who also is proprietor at Jonathan Franklin Cars. Top of the M25, and he also dabbles in finance and does a bit for rare car finance, of which Gerard Liddon is the sales director. So it's Gerard and Jonathan that between them run rare car finance. By the business name, they do the top end stuff, but what not a lot of people kind of really appreciate or understand is they go all the way down to, you know, the more humble stuff that perhaps everybody's a bit more attainable in or interested in. So it will be quite interesting to find out how it differs from the top to the bottom, how it works, because that whole finance game has evolved kind of inexplicably over the last 20 years. It's unrecognizable for what it was,
especially pre and post COVID. I think could be a good ask as well.
Definitely. And then there's also a topic around Porsche to cover, because they're both enthusiasts and owners, but also the finance model with Porsche seems to be a little bit different compared to other brands. It seems to be a little bit more of a safe place in which to kind of get into the game. So plenty to discuss. Gerard Liddon, sales director at Rare Car Finance. Jonathan Franklin from Jonathan Franklin Cars as well. You're joining us today. You two, between you, have got nearly or just over 2 decades worth of experience, have you not, in the finance industry? So
more. Unfortunately, a lot more.
Well, that's good, because it means you two are going to be perfectly placed to talk about today's subject, because finance is everywhere these days, isn't it? Particularly in the car industry. So
I think that's predominantly to sell the metal when it's new, to just sell cars.
Okay. So what is the history of you two then? You were just mentioning off air, Jonathan, that you guys met back at Hexagon Classics, was it not, a while ago?
Yeah, we met back in 2001, I think. I joined Hexagon BMW in 97, would you believe? And which is an awful long time ago. And then John joined circa around 2000, 2001, and we started working together. I think John was in Mini at the time. I think I'm going back from memory here.
That's right.
I was in BMW, and then I left for a stint, and I played ping pong for about 15 years working for Paul Michaels at Hexagon, whereas John's just come out of a long stint after 19 years, which was about 18 months ago, I think, something like that.
So have you both been in Porsche dealerships at all, or has it always been other brands?
Well, from my side, I pre Hexagon, I worked 1995, 96. I worked at what was formerly Merlin Cambria, part of the Pendragon Group. So it was Porsche. It was a Porsche franchise, and I was working as their business manager for the Porsche, Range Rover, and then I looked after Aston Martin and Jaguar at the time, which is another separate franchise in Cardiff, South Wales. But predominantly I was heavily involved with all the Porsches at the time and all the stock we had coming through, which is quite exciting at that moment in time. I didn't realise how good I'm now refinancing cars from that era, which were effectively I was selling and financing all that a while ago. I've just looked it out. That was like 25 years ago. I was like, crikey, I'm feeling old just talking about it. My God. But so I was really fortunate for about a year, and then I got offered got back in London. So I left the Porsche, but in hindsight, I wish I'd stayed for maybe 3 or 4 years at that time.
I tell you what, it's pretty interesting that you're financing the cars now that you were once selling new. There's not too many people doing that. So
yeah. I mean, John's heavily involved with a lot of Porsches, and then just to see the cars come back around, which it's a bit surreal, because I remember doing test drives in 993 turbos and telling people not to put their foot down. If you knew where this dealer was in Cardiff at the time, it was on a flyover just as you went into Cardiff. It was quite well known. But unfortunately, you had to try and tell. In those days, it was pretty naive, to get into the rear seat of a 993 turbo with two clients, and then, please tell them not to put their foot down. So but to touch the cars and the metal now that John and I are really passionate about is truly fantastic.
I'm curious about is the world of finance changed in over that 25 years, or are the fundamentals still the same? Is it crunching the numbers and or is it changed in terms of the way it's done now?
John, over to you.
I mean, obviously in the last probably 10, 15 years, most new and used cars now are sold with deferred payments, residual values, balloon payments, whatever you want to call them. And that, makes higher end cars more accessible to the general public. So instead of doing a traditional hire purchase agreement where, it's effectively like a personal loan where you just pay straight payments, you've got a deferred chunk of money, often called a PCP, with most sort of new car dealerships, where they guarantee the future value. And we do something called Lease Purchase, which is a similar product, doesn't guarantee the residual, but it enables people to get into cars that, they've always dreamt about, that they didn't necessarily think they could afford. And on the subject of, obviously speaking to you, Lee, Porsche, because the residual values of Porsches are historically stronger than the majority of other brands, it sometimes means that, for example, if you're currently driving, a 330 BMW, that in actual fact, there's a possibility you could be paying a similar payment per month and driving a 911. And I think a lot of people don't necessarily know that. I think, people are definitely more finance savvy nowadays, but I think a lot of people, as I say, don't realise that they could be driving a 911 or a Boxster instead of driving a lesser car, should we say, because the residual values are a lot stronger on them, which means the payments are lower.
Yeah, it's a difficult line to cross, isn't it? I mean, historically, I've always liked to own the cars that I drive, for example.
Yeah.
But finance these days, it's kind of become a lot more flexible, I think. And it does open the door, I think, to other possibilities, if you like.
Yeah, it does. And there, you've got to remember, most of the products that we sort of try and push, if you like, are ownership products. So the V5's in your name. It's not to be confused with a hire agreement, a contract hire agreement. These are, you own the car, the V5's in your name. Yes, there are options when you come to the end of the finance agreement. You can keep the car and refinance it again, or you can pay it off if you come into some money, or what the real idea of it really is, you can constantly upgrade, and hopefully there's a bit of equity there in the deal, so you can put that down on your next car and move on to bigger and better things.
How does it work with older cars? Can you apply any of those sort of newer products to older Porsches? I mean, you said obviously you got stuff coming back around that you're financing, but can you run those through the same calculators, or are they different?
Yeah, exactly. It's exactly what we do. I mean, Gerard spends a lot of his time, refinancing classic cars, and a lot of them are Porsches. And because the values are very steady, and sometimes, obviously, not all the time, depending on where the market is at any particular time, but quite often some of the cars increase in value, which means customers, as I mentioned earlier on, can can sort of continue to upgrade.
In principle, it doesn't matter if it's a classic car or a new car, like Jonathan was just saying. It's exactly the same principle. The age and the interpretation of the lend on the car is just, it's an interpretation of the banker that, or lender of choice that we use. Is that John and I, particularly in John's experience of the cars, and then my blend of experience with the finance, we can pick a lender of choice for that particular car. So if it's a 25 years plus classic Porsche or a race car, we can go and speak to the right sort of people and marry the asset, the Porsche, to the lender, and then obviously the individual and the makeup of the individual as well. So it's the same principle. It's just whether it's a performance car, high performance race car, Porsche, etc., all the way through, we can work it out and find the right choice for the customer.
I think it's a good point to make, because Porsches in their own right, they are commodities, aren't they, really, especially in comparison to other brands. And
totally.
I think there are two reasons for that. First of all is the passion, the following that these cars have garnered, but also in particular reference to the newer stuff like GTs, Porsche's exceedingly good at the numbers game. They make the right amount, don't they? It keeps things buoyant market-wise, doesn't it? I mean, look at 991.2 GT3s at the moment. They've had a complete resurgence, haven't they, off the back of 992s? So
they've gone absolutely mad. I mean, 2 or 3 months ago, there were cars out there for 120, 125,000 pounds. Now, last few days I've been looking at, Auto Trader piston heads. There's cars out there for 150,000 pounds, which, you could say, because of what we've gone through with COVID, there's a bit of excitement there, and maybe things are hotting up a bit too much. Maybe, I don't know. That remains to be seen. But as you say, quite rightly, it just proves the Porsche brand is solid, which, from a finance perspective, gives all the finance companies, the lenders, confidence that to loan against these assets, and hence the residual values are good. It sort of goes around in a circle, to be honest. But it ultimately, at the end of the day, it means that people like you and I can get into cars that we didn't think we might necessarily be able to afford, but we can, because the residuals are so strong.
Yeah.
I think it's quite interesting that those .2 GT3s. I mean, there can't be many products out there that actually, they dip in price, and then on a 2 or 3 year old car, and there's not another brand where it would dip that much and then come back by 20 or 30 grand. It's in the space of a few months. It's quite.
I don't think that's brand specific at the moment. I think that's across the board, and I think it's fueled by money that's come into. Basically government money is being splashed around everywhere, so everybody's a bit buoyant. They've not been on holiday. They've got cash in their bank that they normally wouldn't have. They've not gone out to the restaurants.
Definitely got increased demand, I think. Yeah, for sure.
Yeah, and then you've got the mentality, which is the sort of fuck it mentality, as in, you only live once. You only live once. Yeah. This time last year, right, we were all thinking, fuck, are we going to be alive this time next year? So everybody sort of batten down the hatches and see what happens. And now they're all going, wow, yeah, that's it. I only live once. So I kind of scared of, how long is this actually going to last? Is it one of those, way up it goes and it's going to just go tits up? I'm afraid I'm a bit old school, and I do like to own stuff, and So I'm going to put a downer on everything. Sorry, chaps.
Yeah, I could just imagine, Andy, the scenario where you're kind of sitting at home with your significant other saying, this time last year was a close call, wasn't it? It was, how lucky we'd be here today. Them saying, yeah. And you going, anyway, what do you reckon to the colour of this C4S? That's a nice little inroad. So,
yeah. But I'm always keen for it. So go on.
I was going to say, Andy, you make a point like you like to own stuff. I had the exact conversation with my dad many years ago.
Yeah.
Because he didn't quite understand what I did, lending on cars. And then what John and I do is quite sophisticated, whether we're going from 25 grand lend upwards where there's lots and lots of zeros, but fundamentally it's just an asset, the car, and it's the interpretation of that. It's just a bit like the house. Not everybody can go out and buy their house for cash, so they get a mortgage, and it's effectively the same principle. It has evolved over the last 30 years. Unfortunately, I've been doing finance for that long. So it's gone through different stages, government support, and as John mentioned briefly, everybody jumped out of company car schemes, which is probably about 18 years ago. I'm going from memory here. And everybody went into a PCP product, which Jonathan again mentioned, to give them security to shift the metal. But historically, they were all lease purchase products with a residual, which fundamentally is very similar package to a house with a mortgage with an endowment at the end, historically. So it's kind of the same principle. It's just a different makeup slightly, in so much as you're looking at the car and the interpretation of the car. And what we do, John and I, is quite specific to Porsches, etc.
Okay. I guess I am old school. I do like to own all of our cars, and we prefer not to finance them. So I kind of, there's probably quite a lot of people that are in our audience that are the same. How do you've done a sort of a little thing there that might help me turn my mindset around. Is there anything else that could help me understand it more and maybe accept that I could put some car on finance?
Yeah, sure. We have hire purchase agreements where just like a similar to a personal loan. So effectively, you could be borrowing, anything from sort of £5,000, 10,000, 15, 20, 25 on the car, and it just reduces to zero. So there is no residual or balloon on the car. So ownership takes place at the end of the term. And it just acts like a traditional hire purchase agreement. But it depends on the individual. They may want to be payment led. So they got a particular budget. They would like to look at as John mentioned earlier, maybe they've gone from looking at a BMW or a mainstream car, but their eye is on that Porsche they've always wanted since their childhood. And the payments can be very, very similar with certain types of products. So if that's what they're looking at, but then you do get traditional people who just want ownership at the end of the term. I want to own the asset, own it outright. And we can cater for that as well, totally.
Do you know
Sorry.
Go on, Jonathan.
I just wanted to say to Andy, would he have any idea how many cars that are on the road these days are actually on finance?
Oh,
because I think you'd be very shocked.
I think it's massive. Probably 90% of cars, or a car,
90%.
Cars that are within 5 years old. I'd say 90%. Yeah, maybe even more.
You're right.
Yeah. Do you know how I look at it though? And actually, Gerard, you touched on that rather handsomely, I thought, when you mentioned about your dad was saying that he bought everything up front. And to be honest, my dad has always been the same as that, and to the point where when we were kind of growing up and just flying the nest and finding our way economically. I used to have to keep things from him and not tell him how much things had cost because he'd go mental. And then certainly if we were, not that we did, but if we were to go and buy a car on finance, he would hit the roof. He would say, you must save for these things. But it's funny, as he's got older, and I think this is kind of part of life, and the last year has really exacerbated that, where you live once and kind of now, where you acquire things and that. And he's more accepting of it now, rather than being like, how much did it cost or whatever. He just goes, are you happy? Yes. Well, then that's the main thing. And I think to add to that, I think where finance opens a few doors is if you save for things, say, you need to save for 5 years to kind of purchase the car you want. Well, I mean, you might not make it to the end of the 5 years because that's how life goes sometimes. But, also those 5 years that you are spent saving, you're missing out. So I kind of view finance as like it's doing the saving part, but in the here and now, it allows you to enjoy the thing in the here and now.
As long as it's done responsibly, it does exactly what you're saying, Lee.
Yeah. That is the thing, isn't it? It's the responsibility part. So, I mean, especially with the last year and the pandemic and whatnot, it's caused people to rethink things financially. How has the game kind of shifted for you guys?
Gerard, do you want to answer that?
Yeah, the start COVID all the way back in March last year, so John and I got a panel of lenders that we dip into that we can utilise depending on the car, the individual, the makeup of them. And at one point, I was phoning the lenders each week because depending on their size, how much forbearance they were giving their client base because of the COVID and the restrictions on not only the world, UK. So but John and I have aligned ourselves with some really unique lenders who are quite agile. So there could be small man teams within a classic car division, title bank. So they've got adaptability and they weren't really affected. But yeah, there was some difficulties with liquidity because not everybody knew how they were going to operate. One lender stepped away from the market, which I think in hindsight was probably one of the best things. Some of the lenders, their customer service was pretty appalling because they simply couldn't deal with their own client book, never alone new business. So they made themselves, unfortunately, look at times a little bit silly, but that's kind of addressed itself. Everybody's realigned, started off the new year, and it all comes down to like Jonathan and yourself, Lee, were just saying, just making sure the customer is, within the protocols of what their budgets are, because people see one thing and they might sometimes want to exceed their expectations in terms of car. It's just making sure that they're being looked after at all times. So affordability, et cetera, et cetera. So, but yeah, the banks are all pretty much in line, and we can, we got a panel of lenders. So we've got 9 or 10. We brought on a couple of new lenders coming into the new year just to see what happened from last year, which gives me and John a bit more movement, and just making sure we get 2 or 3 quotes for each individual client when they're asking us to go to the market and say, okay, this is the car, I'm interested, this is my budget, what do you think? And we just get that interpretation and just offer it to the client and see what their thoughts are.
Yeah, okay. What's because people I think tend to historically think of finance as the super high end stuff, which I know you guys do, but also there's the other end of the scale, which again, from previous conversations off air, I know you guys do that as well. But what's the least amount that someone could finance, maybe within like Porsche circles? So, are we talking like 986 Boxster or something at 10 grand, or would you expect them to kind of cover that? Or
with our lender panel, it pretty much we got one bank who can go down to that sort of level. Most of the other ones pretty much started about the 20-25 mark.
Yeah, okay. So I mean, it's 9/11 territory, isn't it? And
yeah, totally. You've got one bank that will go down less, but really at that point, it depends on the car. And the provenance of the car as well, because you want to start looking at history, making sure the customer's getting the right quality of car, and also when we're dealing with dealers, the dealers are also being checked out as well for the lenders. Okay. So they will check the route of the car, the provenance of the car, and title ownership, making sure that the client is looked after.
Yeah.
Because that it's got to be checked. It's got a service history. It's got correct title. Because any lender of choice that Jonathan and I use, they will check that. So that's some of the protocols they put in place. They'll check the history, ask for it, making sure what they're lending against is effectively what it says on the tin as such. But pretty much John and I kind of work from the 20-25 thousand mark. But yeah, we can cover most things. What
about you touched on dealers there. What about privately owned cars? I know it's can be quite difficult to get finance on that. I mean, do you have availability for, if we found, if you find something privately that you think, okay, this is, the perfect car, but it's a private deal rather than a dealer. Is that
absolutely. You just need, when you're dealing with a private seller comes to us, private buyer comes to us, found this car through Porsche circles or a forum, perhaps, where someone's recommended, gone to see the vehicle. John and I will always first things we do is, right, does he own the car? Does he have title? Does he have an original invoice, a purchase sale, or a documentation that we can prove it, copy the V5, and then you start looking at the history of the car. Once I've got those elements, and traditionally what we ask for is about 6 or 7 pictures of the car. So we want to check the engine numbers, we want to check the chassis, and effectively we want to check the speedo, and then you get an interior shot of the car, exterior, and then I can present it to a lender of choice. And then we can look at a private transaction. So there's a bit more paperwork involved. Having said that, a lot of cars pass privately anyway. Porsche circles, someone's got someone, they know someone else, car comes up. So yes, fundamentally, yes. And there's 3 or 4 lenders that John and I can go to and just say, okay, here we go, here's the scenario. As long as we've got that paperwork, if any of those bits and pieces are missing, it's going to be a bit of a struggle for me, because you want to prove title for the new lender.
I suppose that'd be a struggle for anybody doing the lending, wouldn't it? I suppose that's doing it
across the board. Across the board, if someone can't prove they own the car, that's fundamentally, and that's not a good thing. It's a protection for someone buying a car privately. Unless the car's a really old car, and then we can go back. But John and I did something a couple of years ago where John actually got back and found the original title of the car through an auction, and it came all the way through. So we got the provenance there, and we were able to present it to the lender of choice at that time.
Nice. Yeah, that's good. I was going to ask, do the rates get worse if it's private over dealers, or are the rates much the same as long as the paperwork's in order? Or just obviously you say it's less lenders that you can go to. Does that make it less competitive? Or
no, fundamentally it's the same principle. Just the car, the route to sell. The route to sell for the market for the client. So rates should be exactly the same. Obviously from a lender's perspective. They like dealing with dealers because there's a route to go back if there's a problem with the car. So then you've got, but it depends who the lender you're dealing with and the type of lend.
But say for example, if you're looking at a car that might have some remaining Porsche warranty on it, it's come from a dealer previously, and that sort of thing, where it looks a safe bet on paper, so to speak. So you shouldn't, there's no reason to shy away from that over buying a car from a dealer then.
No, not at all. Absolutely. Well, that gives you more confidence to buy the car anyway, because you've got that warranty in the background. But sometimes John and I will get a classic that will come to us, and it's obviously at a much higher level in terms of lend, and it's just making sure, obviously, that there is routes to title. That's absolutely fundamentally key. So that the lender of choice can take title over the car for the lend that they're lending against the car, and also just checking the valuation of the car, which is key. And because John and I, more so with John because he's in tune with the Porsche market, we could keep a close eye on that. So the loan to value is healthy for the client as well, and the lender of choice. So you're trying to marry all those elements up together.
Opens the doors to a few more options when you're shopping, doesn't it? So that's great.
Yeah, totally.
You mentioned Jonathan's affinity with Porsche there. I kind of want to touch on that a little bit more because, as we know, as you established at the top of the conversation, you've been in the game a while, Jonathan. But also, you've got a massive love for the Stuttgart brand with a couple of cars to your name as well. So maybe dive in on that a little bit.
Yeah. I'm kind of. My wife would say a bit obsessed. Yes, I do have a couple of 911s. I started off with an SC a few years. In fact, no, a Boxster. I had a 2.5 Boxster. I can't actually tell you what year it was. I think it was early 2000s. Started off with a 2.5 Tiptronic Boxster. Then I had a 911 SC. Couple of 3.2 Carreras, and then started building up a bit of capital, and I've done a couple of restoration projects, and I'm kind of addicted. I've got a couple around me, and I always have a couple for sale, obviously. So you could say I'm a bit mad on them.
I've lost many hours chatting to you after we've done, say, a photo shoot for the magazine or something, where we'll just end up talking about cars. And like I say, we've lost a lot of time doing that, but it's all good.
Yeah, no, it's look, I love. I really enjoy talking to proper enthusiasts, and like you, I can get lost for hours. I met someone on Sunday. I had some wheels. A really nice guy wanted some wheels for his 993, and I had some original car graphic wheels. And I came down to the office to meet him, and thought I'd be half an hour. I think I was about 3 hours with him. I'm not sure who was more guilty of wanting to chat, me or him. A bit of both, probably. But yeah, I really like selling really good cars and selling them to really enthusiasts. Doing all the meets and taking, I love taking my own cars out now and again. To places like Box and Gas Bista, and any opportunity I can get, I'm there.
Yeah.
I've promised to come and see you a few times, haven't I? I haven't done that yet, so we have to get that.
Well, the offer's always there. You know that. Maybe if you guys come along to our Road to Redline event that we're going to be staging on.
Love to.
July, isn't it, Andy?
Yeah, 3rd of July. Yeah.
Yeah, excellent.
Brilliant.
Okay, I think that surely helps as well, though, when you have that like intrinsic product knowledge in terms of kind of pointing people in the right direction. I know, in terms of the finance, your job isn't to sell the car, but it's in terms of gauging that trust with somebody else. It's kind of saying, well, have you considered this?
It's key. It's a fundamental key. One of the biggest frustrations, as it has been with all of you guys, is not being able to get out and meet people and just have a little bit of fun with our cars, just get out, enjoy a ride and just meet like-minded people. It's been incredibly frustrating, as it has been for everyone. And that's pretty much how John and I do most of our socializing with our clients, because we just go out and meet them.
Yeah, it's true.
And with London, obviously we're both based down in North London. We just get out and meet our clients all over. I was recently just down in Richmond meeting clients and we just go and meet them wherever they are. So whether it's the office, a park, or whatever, or it's a ride and drive day, you just get out. And that's how we get most of our business. It's all referral business within Porsche circles, et cetera, et cetera. So yeah, love to.
I think, again, that's where Porsche circles are unique, because it's such a hardcore enthusiast following, isn't it? And it's all one big community and family. So I think you guys you're pretty well placed to kind of discuss the market and where things are going. So we were talking a while ago about how things are quite buoyant currently. Do you think specifically for the classics as well, you can see that continuing for a long time?
I think so. It's been it's been a very busy year, despite having to kind of adapt to new ways of doing business. Myself, I've sold quite a few cars this year, and the way I've been doing that is to recommend specialists like Jazz or Porsche Inspections, or people like that to inspect cars for clients, to give them an independent, opinion on the cars I've got for sale. Obviously, things have relaxed a bit now, so it's a bit easier to do business. But it's been quite surprising how adaptable everybody's been, including the client, and that that the trust is obviously incredibly important. But I've had some quite expensive cars be sold that to be honest, I'd find it hard to part with my money at the level some of the cars are, but customers haven't seen them, and I haven't had an unhappy customer yet, so I'm quite pleased. But I think obviously transparency is the key, just being honest with people. I think in a way, it's taught us a new way of doing. I mean, we were already doing it, but it's kind of accelerated.
It's refined.
probably the future, really, of how we do business.
Everyone used to joke about the Tesla model of you click and buy it online and they deliver it onto your driveway, and that's your experience. And people sort of laughed at that for a long time, and then COVID came along and it became the new normal for all the brands, didn't it? So it's a weird thing. And like you said, taking that to older cars and classics and race cars and all these things bought unseen is quite incredible. But a good inspection then is key by the sounds of it.
It is. Well, I sometimes recommend it because people's interpretation of, for example, a classic car, it's obviously very difficult to judge. You and I have both got different standards and opinions. It's quite subjective. So it's good to get an independent inspection sometimes. And I'm perfectly happy with that because I'm confident in what I sell. I think it's, as you say, it's just sort of probably put us all in the Tesla mindset. But
everyone always likes a market update and a bit of inside knowledge. So obviously the general thing I keep hearing at the moment is that there's just no stock around and cars are difficult to come by, and there's stuff isn't coming out of dealers as quickly as it should be, and there's this pent up demand, and then you throw a bit of summer tax on that as well. I mean, what's your rundown on the landscape? What's the market like right now in terms of if someone was out there looking?
Well, I think you just kind of summed it up. I can tell you, I've been trying to buy cars for the last couple of months like crazy, and I'm quite particular. But I can tell you, I think I've bought one car in 2 months. So it's incredibly hard to find good quality stock. Yes, look, prices have definitely gone up. You mentioned GT3 earlier. 991.2 GT3, but I think all the cars are like that at the moment, especially the newer stuff, the more modern stuff. So things like GTSs. Lee and I were talking about 911Ts the other day. Stuff like that. I think it's all really firmed up, and some of it's some of it's increased in value a lot. I guess it remains to be seen how long that lasts. But to be honest, as you say, bit of summer tax, bit of enthusiasm coming out of COVID. I think there's a lot of positivity in the market. I think things will stay firm for quite a while, and it's normally a good indicator for me. If I can't buy a car, once a week kind of thing, then that's normally a very good indicator for me that the market's strong.
Yeah. Does that mean that there's some poorer examples changing money for at the wrong end of the spectrum as well? I think
there's always a danger of that. I think you've got to be careful you don't get carried away and sort of settle for second best.
Snap up a shitter.
Basically, which is why I said, make sure you get your car inspected by someone reputable. There's a lot of good people out there. So, but there are also, typically people willing to pull the wool over your eyes as well. So
I think as well, it amazes me how many people buy a car and then get it inspected. Rather than the other way around. I've never quite understood the logic behind that. There's a hell of a lot of people do it.
Also, the other thing, just to interject at this moment in time, if people are just on the finance side, if they're considering buying the car, pre-authorize the finance before you go shopping, and then you've got everything in place prior. And then you don't have to go through the rigmarole of maybe having a problem when you're halfway through the buying process. You can just go out and you can buy confidently, you pre-authorized, subject to the finality of the registration number, etc. But fundamentally, you've got it in place, and then go looking. And we've told that's one of the things that John and I did throughout COVID, which worked really well for us. Whether you're pre-authorizing 50,000, for example, or all the way through to some big numbers. And then it's just kept us going throughout the whole of Confident. It's just a constant, because you just go out and, there will be someone, whereas a particular car comes to the market very quickly and you've got to react very quickly.
Yeah.
So sorry, I've slightly diversified the conversation, but yeah, it's a good point.
No,
can you be really flexible with that? Yeah, if you said to somebody, right, you pre-authorised for 50,000, 60,000, whatever, and one day they might be looking at, I don't know, if you hope for, I don't know, a GT4 one day, a Carrera T another day, and a newer 4S another day. Can you chop and change the model and make that fit really quickly if somebody's sort of pre-authorised, or do they need to have the car in mind beforehand?
Ideally, you put it in the ballpark of the car that they're considering, or the budget. Put it that way.
The level of length.
Yeah, thank you.
It's a bit like a deal in principle on a mortgage, isn't it? Essentially.
Yeah, exactly the same. And the finality of the car, as long as the car is valued within the valuation of the car, it's not over the top. Otherwise, the deposit will change with loan to value. If you, like Jonathan just said, if you pre-authorize the lend and then you can chop and change it, the residual will change because there'll be a different mileage on the car or the model. There'll be an interpretation of that. But fundamentally, you've got it in place and then you can change it.
And can you be quite quick and responsive? Yeah, if someone needs a deal done quickly and someone's actually, I was looking at this one, I'm now looking at this one. Yeah, can you move quite quickly to get that agreed on a different model or a different car?
Yeah, pretty much. Yeah. Once it's in place, if you chop and change quite a lot, because I had a customer of late who went through he lost out on 2 cars because he wasn't reacting, because the stock, this was like about 6 months ago, he ended up buying the 3rd car, but he lost out on 2 opportunities because he wouldn't. I advised him to pre-authorize it. I said, and then he lost out on the cars because he was just he was just a little bit too slow, because it was a big purchase to him, which I understood. I can chop and change as and when.
What about refinancing as well? Like over
exactly the question that I was going to.
Yeah, what have a lot of people been doing that, particularly in the last year, and again, how easy is that?
Yes, we've got a few. We do a lot of refinance, John and myself, refinance or equity release. So someone's got an asset already, something else coming to the market, they want to buy, they don't necessarily have liquidity at that point, but they have a car that's unencumbered, for example. So we can do either an equity release, or they're coming to the end of the term and they need to refinance it. We do both of those elements, depending on the asset and obviously what they're trying to do. That's fundamentally what we do a lot of, as well as new business. That's constant business that's always ticking over. But yeah, definitely. So if someone's got portfolio cars from, maybe 1 or 2, or they could come to us with, dare I say, 10 or more. We can look at the assets and then raise liquidity through a refinance package or equity release.
Is there any difference in the rate between when you equity release or when you were to purchase the car?
No,
it's all the same. It's just
my interpretation of that. It should all be the same. It should all be the same. Certain lenders used to have a format. So if you're looking at a classic over 25 plus years, they would there'd be a certain 1 or 2 lenders that'll load the rate. In my mind, that's wrong, because it's just an asset, whether it's 25, 30 or 5 months old. It should be, in principle, it's all about the customer, making sure the rates, obviously as the lend gets bigger and bigger, that's where obviously rates should be proportionate to that size. John and I do get involved with some rather bigger stuff, where obviously rates comes it's a key question, as it should be, whether it's 25 grand or, dare I say, millions.
On that note, I've got a couple of schoolboy questions for you, but it's kind of, I'm sure it's going to be on the lips of everybody listening at home. So first of all, what is like the most outrageous vehicle you financed? And second of all, collectors, do they finance their collections or do they put the cars on the plastic?
Do you want to go with this, John, or me?
Well, there are 2 schools of thoughts, as we mentioned earlier. But yes, we've got customers with, we've got a couple of customers with over 100 cars each. Not all Porsches, but yeah, we have financed some big numbers. Probably best you ask Gerard how much exactly.
What's your biggest loan then, Gerard? Come on, give us a number.
Yeah, I've got a couple of pre-authorized facilities at 10 million plus.
Buy most things with that then.
We've got one. There's one bubbling in the background, which I can't go into specifics, which is even bigger. But yeah, there's some big numbers. But I mean, it's not all about the number. It's the same experience, whether it's 25 grand or in this case 10 million. But we try not to talk about it too much because it sounds a little bit, it's the same principle. It's just more noughts. The payments are, but the more complex the individual, more high net worth, the more geared they are, and they know how to use gearing for their portfolios. In some cases, not all, but you do tend to find that because the more worth they are, they like to use their money elsewhere, and that they will fund a lot of their cars. Would you believe it? Because I remember a couple of clients saying to me, I doubt if they would just pay cash for it. And I was like, yeah, you'd be surprised. But yeah, I mean, John and I are really passionate about the cars. So that's fundamentally where we're driven. Client experience, the car itself, and do they drive them? Because we get a lot of investors sometimes. I'm like, just get out and enjoy the car. Just drive it. But it's each individual.
Yeah. Well, what standout cars then? What standout cars can you sort of stuck in your mind over the years where you thought actually that is an amazing car that we sort of come across the books?
I'll finance loads.
What, Porsche wise or any car?
Well, any. I mean, let's delve in. I don't know. You said you do some race car stuff as well, and some rare stuff and a bit of all sorts. But yeah, what sort of stuff what sort of interesting stuff where you sort of get excited?
The problem is in our world, it's quite a small world at the top end. So, in the nicest possible way, we try and keep client confidentiality. Big numbers, very interesting cars, poster cars. If you can think of, Ferraris, McLarens, all sorts of real, Porsche race cars, Carrera GTs, 959s, RSRs, all sorts of stuff. But I sort of don't want to go into specific cars, if you know what I mean, just because of privacy of some of the clients, and some of the clients are very private people. But some, I know that sounds probably quite boring, but
sounds very professional.
But the cars are, we have to be. But I can assure you, some of the cars are absolutely mind blowing. And Gerard's right. You'd be surprised because of the some of these chaps. They've got some very interesting backgrounds and businesses, and he's right. It's all about gearing, and for that reason, a lot of the cars are funded.
I think if you can earn, if you can use that money to earn more money in your business than on your finance, then it's a no-brainer. I mean, the trick that comes to mind that I always used to sort of play a little bit with main dealer, I don't know if it's still the case, is obviously they used to get more excited in the deal if you're going to finance it, because obviously they get an earn out the finance side of things. Yep. And I think the rule, I don't know if it's still the same, but a couple of years ago it certainly used to be that you only had to keep it for, I think it was 3 months as a minimum, and then you could refinance. So actually by, you could sort of squeeze an OPC for a cracking deal, take the finance, keep them happy, and then 3 months later go and see someone like yourselves and refinance it back out. Is that sort of thing still the case? Does that still go on?
It depends on the structure of the deal you've had originally. So fundamentally, you can do that, and you can refinance out, but it depends on the original deal that was set up. A lot of OPC dealers, we're doing Porsche contracts, PCP, private contract purchase. So there's a guaranteed buyback at end of term-ish, inevitably, I would presume, not to get into regulations, but it might be a particular type of regulated deal. So there is protection there for the individual. But fundamentally, you can look at that depending on the cycle of the car. If they put in a very, very low deposit, they've then got 3 months down the line, you've got a revaluation of the car, because refinance is on, most of the lenders would do it on a what they call a fire sale or a pined value.
Okay.
Because so if a customer's put in a very low deposit, or there's been no part exchange or whatever, you then got to look at loan to value in a refinance scenario. So there might be a period of time where they just have to let the agreement run it due its course. Mm-hmm. So it could be like 18 months. When John and I used to work at BMW Group, and we used to do major lending, but average agreements used to be like 22 months. And the lenders, from a BMW point of view, they were borrowing money on a 22-month basis, and that's kind of like used to be an average term. On the more specialist stuff that John and I do on Porsches and stuff like that, is completely different market, because these are keeper cars, or if they're going to change, it's for something that is simply just come to the market, or, just taking their fancy. They've gone from it could be anything. They might go to 993 and think, oh my God, there's a 964 C2. I want to jump into that because that's my iconic car from when I was a kid. So it really depends on the individual, what they want to do. But yeah.
Awesome. There's so much knowledge here. I think this is going to be one of those episodes where people are going to listen back a couple of times and just absorb everything. And we are really grateful for the knowledge that you two have imparted today. I think before we wrap things up, we've got our 10 Porsche questions that we ask all of our guests. But I think before you panic on that, I think it'd be good. So I'm sure many people after this are going to be going online, looking at dealers, looking at cars, and just seeing how the land lies. Perhaps a little bit excited from today's chat. Are there 2 or 3 bits of kind of key advice that you're willing to just say, right, as before we sign off and before you go looking for these cars, maybe just consider this?
From a finance perspective?
Yeah.
I'll do this one. Just paperwork and communication with paperwork and myself. It's just like going to a bank, in so much as we need clear, concise information. If that information is not forthcoming, it's very difficult for me as a broker to get best of market rates, terms, and the right product for the individual. Because if you then proceed forward and you can't get, so some of the banks will ask for maybe 3 months bank statements, a copy passport for fraud prevention, just to check the individual is the correct person that's applying for this finance. It's not fraud. If we ask these questions, it's because we need that information to support their application. And it's just being aware of that. So if Gerard or Jonathan is speaking to a customer, we ask for specifics, we need that information because we can't take it forward, or it's just fundamentals to package together. Clear, concise information presenting it, we'll get a clear answer, yes, no, or further information. And it's just being prepared for that. It's a very simple exercise, but it's just communication between both parties.
Awesome. Absolutely awesome. I think a big thing for me that I've picked up on this conversation is you can essentially get a finance agreement in place, kind of in principle, before going off and finding the car, then trying to finance it, and then perhaps not working out, and you kind of getting that disappointment once you've found the car of your dreams. Totally. It's really interesting to know you can do it the other way around. As I say, a bit like a deal in principle on a mortgage. So
yeah, it's exactly like that. Knowing, looking at the loan to value, what you've got in your pocket, looking at a house or a flat and saying, this is what I've got, what can I get? And then exactly as you say, you've got the ammunition to go out and execute a deal on a car without worrying about how you're going to pay for it or looking silly. If all of a sudden you then can't afford it.
And that's the thing, isn't it? And that's where it then plays into you're looking for the right car rather than the car you can afford. You're looking for exactly the right car.
Well, you know where you stand then, and then everything is clear, isn't it?
Yeah.
And just to come back on a point, affordability is key to a lender. If a customer comes to us, so John and I sometimes do push back on customers because they're pushing the boundaries of what they can actually afford. Yes, the car is the car of choice, but sometimes we just say to the customer, look, it's not quite right now, because you're trying to make a too big a jump. And we do push back because we have to look after our customers. It's key. They must be able to afford what they're looking at. And it must be clear to the lender of choice. It's a fundamental, basically.
Yeah, quite a lot of responsibility there, isn't there, to kind of make sure that these deals are right for the client, I think, isn't it? I think
Well, I think if you, yeah, absolutely. If you approach it the right way with the client, they'll understand. It may not be the right decision for them at the time because they're emotive. That's the car they want. But they've got to understand it's quite specialist lending sometimes. So you've got to look after the client at all times, because sometimes the car in front of someone, and it just drives them, and sometimes you just got to look back and reflect on it, and that's a key part of our role in looking after the client.
Do you hear of horror stories where people have got it wrong? Someone's put them into a finance deal, they've ended up with a massive lumpy car, a negative equity, and they can't get out of it, or they want does that sort of thing happen out there still?
Well, COVID's as we all know, the market's changed across the board. McLaren's, Ferraris, certain products have gone backwards. So if they've gone into a new car, for example, 12 months ago, they're trying to get out of 6 months because they're affected by COVID. They put in a small deposit. They still got a finance agreement for maybe 3 or 4 years. Affordability's become a problem, so they've had forbearance. But putting that to one side, the car is devalued from what it was originally. Particularly in a new car, you've got depreciation costs. And that's got to be factors in. So it really depends on the car of choice, what they're in, and what type of product. But but that's been across. You look at Aston Martins, Jaguars, certain Ferraris. I think what's been really good is how solid the Porsche product's been throughout the whole COVID, and that's not me just beefing out. That's just from a finance perspective. It's just such a solid car throughout.
It's more solid than any other manufacturer.
Totally.
I've got a question relating to that. So I've got a theory that the financing game has fueled the list price of cars. So if you were to look back 5 years, one that came to mind today when I was listening to something today, and it was the M3. An M3 is now 78 grand for a basic M3. Take 10 years ago, I don't know, it's probably 40 grand. The actual inflation hasn't gone like that. The list price of cars across the board has just gone bloody ballistic in the last few years. Yeah. And everybody seems to think, that doesn't matter. It's about how much I pay a month.
And that was driven, touching on a point earlier, when I was talking about historically, like 10, 20 years ago, you had lease purchase, then everybody came out with company car schemes. It was driven into private contract purchase because because of the government taxation on company cars. So everybody went private names. PCP has driven the new car market, and everything is led by that. It touches on the point John made. 90% of new car purchases are manufacturers. That's the only way they can drive the metal. And yes, absolutely, you got manufacturers driven up. Now, I work for BMW Group, and these discounts in the background were phenomenal that are available. But PCP has driven that market, so it's payment-led market on manufacturer volume product. And BMW, unfortunately, has become a BMW product because they're trying to keep up with Audi. It's an age-old battle between the prestige manufacturers as such. Who can have the biggest number for the year-end figure?
Kind of scares me. Are we are all those manufacturers setting themselves up to fail by all of those list prices going up and the amount of finance that is going into the market in those new cars? To me, it just feels like, as an old school guy, that this is a big bubble that's going to really blow up in all of our faces at some point. Or am I wrong?
a crystal ball time. I think it's going only one way. The volume, there's going to be huge dynamic change with electric cars. I started funding a lot more electric cars last year. Joe mentioned Tesla earlier. I think I got involved with a few Teslas, financing them. And that was quite an experience, just trying to deal with a finance package through a Tesla dealer and how they operate remotely. I ended up speaking to Europe because they have customer services and they could be based all over Europe or the UK, but you're buying a car in London. So that was quite interesting to deal with that. And I think they've got it right in that context and the buying experience. But yeah, I think dealers, they're going to have to change. We've had the diesel to petrol scandal, and now we've gone into electric cars is driven now. It's a fundamentally stable. Is the infrastructure there? I don't know. Probably not yet, but I would say watch this space the next 2-3 years. I think that's going to explode on that side. And that family car will go from petrol, diesel straight into electric.
I think that's another point, though, that leads on to Porsche having very strong residuals. Totally. I think inevitably electric cars and maybe hydrogen in the future are going to kind of, as you say, when the infrastructure is there, it'll kind of cancel combustion engines out maybe for new car products. But I think that will make the cars that we're driving today, the sort of 964, 993, 997, 991, all those sorts of cars, I think are going to be, I think they're going to be really, really sought after, which is another good point, actually, because they're a sort of recreational car. Very usable for family and all the rest of it, but generally they're a sports car, a bit of fun for somebody. I think that's why Porsche are still, commanding really strong values, because people want to hold on to them. And I think that's only going to get more sort of pertinent, if you like. I think that's another tick for Porsche.
Well, on that note,
I'm not biased, am I, at all?
Yeah.
It's the perfect podcast to be biased on, Jonathan. So you're all good there, my friend.
That's true.
We'll wrap up the episode then by asking these 10 podcast Porsche questions to you both. We'll do them individually. So maybe I'll put Jonathan on the spot first, and then we'll come to you, Gerard, afterwards. So they're quick fire answers we're looking for. Try not to think about them too much.
Is it some product?
Yeah, just culture and lifestyle, I would say. So
right, okay.
It's not a test.
It's not a test. Yeah, there's no.
Feeling the pressure here.
Yeah. Well, so you should. But there's no wrong answer. It's just whether you believe. So, Jonathan, we'll kick off with you then. Your 10 Porsche questions. Number 1, air or water?
Air.
Favorite Porsche model?
964.
What one?
Well, an RS if I could afford one, but a C2 manual is probably where I'd
You're happy
where I put my money.
Okay. Favorite Porsche color?
Riviera blue.
Your ultimate Porsche icon. This is a person.
Probably Walter Roll.
Excellent. Yeah. Favorite track?
Brands.
Fuchs wheels, to Fuchs or not to Fuchs?
I love Fuchs wheels on the right car.
Okay. Stock or hot rod?
Look, gut reaction, but purely because of what I do for a living, probably stock. But it's a
there's a backtrack coming on. I can feel it.
I think we've got another question coming up.
Probably no. I've got a few Porsches, and one of them is modified. So
narrow or wide?
I'm not against
body?
it.
Okay, narrow or wide body?
Narrow.
Cars and Coffee or Track Day?
Track day.
Interesting. Okay. Last one. Back seats in a 911. Yes or no?
Yeah.
Awesome. Absolutely awesome. Other than the stock,
I've got a little girl, so
family-friendly cars they are.
Yeah.
Ideal. Coming into their own there. Awesome. Okay. We'll repeat the same questions then for Gerard. Andy, Joe, do you guys want to do that, or?
I'm going to struggle with this.
Oh yeah, I've got them queued up, so I'm ready to go.
Andy.
Okay. Air or water?
Air.
Your favourite Porsche model?
Well, John's already said it, so I'm going to go 993 because I did sell them at the time. 993s.
Good lad. Your favourite Porsche colour?
One of the blues. I do like Riviera blue, like John said, so I don't want to copy him. I don't know. Go silver.
Who is your ultimate Porsche icon?
God, should we just say Ferdinand Porsche?
Awesome, yeah. Do you know, I don't actually think anyone's ever said that before, which is astounding when you think
he's the man, he's the master.
Yeah. So fair play, great answer.
What is your favourite track?
Silverstone.
To Fuke or not to Fuke?
Fuke.
Stock or hot rod?
Stock.
Narrow or wide body?
He's sweating, I think.
I'll go. I'm going to go.
Difficult one because now I've had time to think about it.
Yeah, narrow.
All right. Cars and coffee or a track day?
Track day.
And lastly, do you do back seats in a 911?
Absolutely.
Good. I've got a question then that sort of came out from that lot. Financing of modified cars.
Yeah.
What's the score with you guys on that side of things?
You can do it. It depends on the interpretation of the car. Some of the lenders don't like it.
Yeah.
You can do it if you've got the right. So one of the big things about John and myself is not trying to beef us up. Is we've got so much knowledge on the cars, particularly in John's case on Porsche. We can help the lender with the interpretation of the value, albeit we'd have a foot in both camps. But it's quite specialist. If it goes completely over to the, someone's gone completely off the, remit, as it were, with the car. But yeah, you can do it, but it's specialist lending. So there's maybe 2 or 3 would look at it, but it depends on the car and what they've done.
Yeah, they won't necessarily place as much value. If you've got let's say you've got a 964, for example, and you spend £150,000 on it, doing a 3.8 or a 4-litre conversion and put special suspension on it and, et cetera, et cetera, et cetera, they're not necessarily going to account for £150,000 worth of mods onto that car. They just, a finance company, some are better at it than others, but they won't understand that.
Yeah,
but that's fine, because even when you modify a car, you understand that 9 times out of 10 it might even be detrimental to the value. It's not the reason you do it. You're not value led. You're enjoyment led, aren't you? Yeah, exactly. You never get back what you put into these cars. We do it because we're stupid.
Just one other question just come to mind. I mean, now and again, it's quite good, I find, to ask people that are in the know with finance. Is there anything recently that you've put through that let's call it accessible? So let's say sub 100K Porsche, where the numbers have stacked up really well, where you've gone, wow, that really, really works from a deposit, residual, balloon, monthly. Yeah, is there anything that comes to mind where you thought actually that just stacks really well if somebody wants to get into an accessible Porsche at the moment?
I can't remember the exact figures, but I had a 2018 991 Gen 2 GTS coupe.
Lovely, yeah.
PDK, and I can't remember the exact figures off the top of my head, but I remember looking at the figures thinking, wow, that's much more reasonable than I thought. And, you're talking about a car that's £80,000, which is a big amount of money, but the figures were, I think it was £500 a month. I can't remember the deposit now, but I was really surprised, because going back to what we were saying at the beginning, because the residual value of a GTS is so high, it made it very accessible. And the guy who bought the car came out of an Aston Martin V8, and I don't think he could believe his luck.
I know who he is, but there we go. That's really the key to the service that you provide, I guess, is that you're understanding what a car is worth. You're not just a bank that's saying this is a loan of £80,000 and this is how much percentage you're going to pay on it. That's a set figure. That's how much you get when you go down your local bank. You're actually offsetting all of that against the value of the car and what you think the car is going to be worth in the future. And that's all the positives that you're bringing to bring those figures down, isn't it? That expertise.
That's right. Yeah, exactly.
Yeah. And also, if it's in budget or well below, so there is a strong, like John mentioned on that particular car, a strong residual, or the lender is given a strong residual balloon at the end of the term. If it's well within budget, you can reduce that final payment, creating more equity at the end of the term. So if a customer's, hypothetically got a budget of 500, you've come in at 400, which they're ecstatic about. Why don't you reverse cycle it? If they can comfortably afford their budget they've given you and it's shown, you can reduce the final payment, creating more equity at the end of the term. So if they do decide to come out a month, 36 on a 4-year term, you're creating a bit more equity. So it's making sure, once again, the customer is being looked after.
Quality. Well, look, there's been absolutely loads learned there. So again, thank you very much for your time to Jonathan and Gerard from Rare Car Finance.
Thank you.
Thanks.
Absolutely cracking chat.
Nice to meet you guys.
No, good to talk to you.
Very, very interesting then. Andy, particularly keen to get your thoughts on that, because you were a little bit anti, I suppose, finance to begin with, weren't you? What are your thoughts now?
I guess probably still generally I'd rather pay for stuff. I feel more comfortable being the older generation, I guess.
You said
I'm just a bit, if you've got everything on finance, if it all goes tits up and you lose your job or whatever, whatever's keeping everything paying each month, I don't know, I guess you can hand it all back, but I just feel much better actually owning stuff. But it was interesting. What I did find interesting was that finance sort of model is very different to just borrowing some money from the bank, because you're securing it against the actual item. They take more interest in it, and I think it's probably a better all-round product.
That's, I suppose, where the value of Porsches come into it, isn't it? Because as we said, they really are a commodity in their own right.
Yeah.
Makes it easier to loan against, I think. And the whole model where it's changed now, isn't it? You're deferring a lump of the asset. So you're only really paying interest on part of it and saving the rest down the line. That's what makes it monthly affordable as opposed to necessarily outright affordable. But it gets people in the cars they want to be in. So I don't really see the problem.
You're Mr. Mathematician, Joe, I've decided after that interview, because some of the questions was coming that you were definitely revealing yourself as someone that might be a little bit seasoned at this game.
I think back in the day, I think I got on the finance carousel, as I'd probably call it, where you sort of you end up, especially with Porsche. I think you can go in and get into a car you really like, and then before you know it, something else catches your eye, and it's not a case of how much is the car. It's kind of what does the deal look like, and what's the ins and the outs, and ultimately what's the monthly. It is definitely something you can get caught in, because they make it so easy to transact between cars. So I think that's the danger of it. And we've got friends that have done the same, who've openly sort of said, suddenly they're jumping between cars every 5 minutes and don't really see why. And I think sometimes it's good to spend a bit more time in a car rather than be in it for, I was in some of my cars less than a year, and I just think it's madness. Like, you can't, it takes you longer than that to get to know a car, let alone be chopping and changing.
Yeah, it's a good point, Andy, regards like the sticker price, and it's almost like, I mean, it is irrelevant, but it's not like real world anymore. What is real world is the monthly fee, which I suppose again is a good thing, because it definitely breaks it down and makes it look more manageable from what I can see.
But what scares me is that that list price is so huge now. It does still matter, because there's all this money has got to be somewhere to actually pay for that at the end. And it's almost like, are we just storing up a huge bubble? I think it filters down, though. I understand where you're coming from, but I think it does filter down, because there'll be people that can only afford to get into a £50,000 Porsche rather than a brand new £100,000 Porsche, and they will still use the same finance products. So it's just making it accessible at different levels. And your monthly might be 400 quid rather than 800 quid. But different budgets, different cars, different people. So I think you are feeding the food chain as well. And there'll be people further down that food chain that you might go and spend £50,000 cash and buy their car outright. But it's come through, it's come through the process of the finance world to make it accessible.
It's from what I can see, and I'm a complete novice at all of this sort of stuff. It's like the exit fee means as much, and that's where the window sticker becomes what am I trying to say? It's relevant, I suppose, is the word. So, like, if you buy a car at 120k, well, that's the list price, but then after, say, 2 years' time, because Porsche values seem to do really well, it's a GT product, it's been buoyant. Say if after a few years it's still at 115k, because that you've only lost that kind of little bit. It's the gap or the margin that matters almost, isn't it? I suppose.
Yeah, it's always the gap and the movement in value. I think the thing not to get caught up in is GT product is rare, and the same doesn't apply to everything. GTS is strong, but it's not anywhere near the same as GT product that might hold its value to that degree. If you buy a brand new 992 Carrera or whatever, you're going to lose tens of thousands of pounds a year on that car in depreciation, plus on top of that the interest you're going to pay. So I think that money is being lost and is being paid for in the deal. So I think it all depends on the car. I think if you're clever at what you're buying and how you're buying it, then that's But ticket price, like you said, BMW ticket prices don't mean anything. I mean, I know people been into a dealership and it says on the forecourt, £20,000 off the ticket price. Well, how can you knock 20 grand off a ticket price? It's irrelevant that the ticket price was made up in the first place. So, I think Porsche's slightly different, because obviously they're not in that sort of discounting model of numbers. But I think it's a great way to get into cars when the monthly figure is the key. People are used to doing it, aren't they? They're used to either leasing cars or financing cars, and it's all about what can I afford per month rather than how much is the car. But you're right, the exit and the down the line values is actually, and it's a difficult one to weigh up, because I sort of remember doing some of this, and if they give you a lower value, guaranteed value down the line, what it means is you're actually paying more upfront, if that makes sense, so that the gap that you're paying for is bigger. But what that actually also does, it potentially builds some equity back into the car, which is a bit what like the guys were saying. If you pay a bit more upfront, it means that they might say, right, guaranteed value in 3-4 years time is 30 grand, when actually in reality the market's quite good, you get 40 grand, so they give you 10 grand back in your pocket, which gives you 10 grand deposit to go and put on your next one. Where they come unstuck is when you get left with nothing.
It just reminds me of endowments back in the 80s and the 90s when I was, sold an endowment on my £36,000 mortgage, which was 3 times my salary. I was told that I'd probably be able to retire when I was 50 because I've got this endowment that's going to do amazing things, and that is all a bunch of bullshit. And I wonder, I just see all it happening the same.
Were you well endowed back then, Andy, or were you not well endowed?
You probably don't even know what an endowment is, do you? You're so young that you've never heard of one.
To be honest, it does sound like something that would usually incorporate a doctor's appointment. I'll tell you what was pretty magical in that chat was the fire in Joe's eyes. Like I say, this is all your bag, mate. You love it, so.
I don't know. Was it? Maybe that's wasn't intentional, but yeah.
No, it's good. It's good. Like I say, it's a new world to me, really. So
I think it's really sad, but I find it really interesting. Yeah, the way that financial mechanism stuff, whatever you want to call it, products, whatever they name them. Yeah, ultimately it's lending money, isn't it? But I think the way that they creatively lend money, I think it's quite clever. I think, the fact that 10, 15 years ago, someone went, well, why don't we just charge interest on, the bit of the car that is depreciating rather than the whole thing? And the fact that someone's been able to go and underwrite that, is really clever. I think it's clever stuff. I mean, it's not rocket science, but I think it's good, and it gets people in cars ultimately. And I think if you're not well endowed like Andy, then it gives you options.
Absolutely brilliant. Well, on that note, I think we better wrap it up.
It's all gone downhill quickly now, isn't it?
It has. Next week, what's the plan?
Hold on. Before we jump in, I reckon I'd like to turn the question back to you, Lee. Would you think you'd ever jump on the finance bandwagon?
I think so, yeah, to be honest with you, because as we were kind of talking about in the conversation there, it just means, and where we all understand life is short and you only live once, etc. It just means, if you want to get into a car, well, there's no reason why you can't. Like I say, rather than waiting and saving. And life and society, I feel, is kind of geared up that way these days. I know, as Andy says, there are inherent problems bred from that, because when it goes wrong, it'll all go really wrong, and house prices are saddled in the same way and whatnot, aren't they? But it does it. I think, the basic principle of, well, if you want it now, you can have it now, I think it's quite appealing, I
think it goes, for me, it just goes on, you got to put it on the same list as your other monthlies that you can't get away from. Most people buy their iPhone is on a monthly contract. Their house, whether it's renting, mortgages, whatever, is a monthly amount, and it just becomes, your car becomes a monthly amount, and you get the car you want, and I think
slaves to the monthlies.
Well, to a degree.
It does go back there, doesn't it? Nobody needs a Porsche. We all have one because we want one. So like Andy, if you're saying, if it all goes belly up tomorrow and you have to give your car back, well, you're still going to eat. No one's died. You've got a roof over your head. Like the problem isn't conceptually as big as what you might think. Obviously, it'd be disappointing, but it's not like a fundamental kind of threat to survival, is it? So I kind of think, well, it's, when you weigh up the risk v reward, personally, but this is the thing, everybody's different, aren't they, ultimately? And at the same time, the economy and dealers and whatnot, they need people like you, cash buyers.
I don't know if they want them anymore, to be honest. I think, they all get a good earn out of doing the finance, don't they? So I think, being a cash buyer is not really what it used to be.
Yeah. It's almost a disadvantage.
Yeah.
Especially if you're buying a new car.
Definitely if you buy a new car. I think I've talked about it openly before, but there's people we know that have been told you can have a GT car, but you have to buy it on finance. That's been part of the prerequisite, which I always find interesting. So it's that's happening from dealer levels. You can only imagine how it filters down.
Yeah,
I guess it shows how much cash they make out of finance.
Yeah, there's money in finance.
Yeah, which is all coming out of our pocket. I'm sorry, I'm just sticking with old-fashioned. I'm staying old-fashioned.
You stay well endowed, Andy. You stay well endowed. And on that note, we should probably call it a night.
I think we should.
You've been listening to Road to Redline, the #1 Porsche and Car podcast, fueled by our generous Patreons. If you'd like to join in supporting the podcast, please see patreon.com/Road to Redline and find us on Instagram.